Yeah, I would guess 2 to 4 weeks kind of would be in that range where we could chop sideways for 2 to 4 weeks and then kind of grind up. I think we probably hit 25.5 or 25,000 within the next week. And then you'll see some resistance there and some chop, and then one more leg up going into that. And then after, probably outside of a month, we start our next leg to the downside. Yeah. So believe it or not, I'm kind of counter, and I've generally made a lot of money being counter trend to what most investors will think, or even the media kind of spews and I found that to be very successful. So when everyone's lobbying and saying, hey, listen, the dollar is going to continue to rip, you got a war with Russia invading, and that's making people go to the dollar. You got all this fear out there, global recession. I look at the chart and I just say, okay, well, let me look at the chart. That's the true form of honesty. And what you could see here is you have some big trend lines that we just slammed into. So I actually went bearish on the dollar, and in doing so, I've accumulated some crypto, still in some. I've taken some profits on the latest run, but basically weakness in the dollar is good for gold. It's good for cryptocurrency. It's even good for tech stocks, and we've seen a real move up. So if you look at the dollar, this is the weekly chart. You can see we actually had a nice pullback right after hitting this area. And, you'll get some bounces in the dollar because it's a strong trend. But overall, I think the dollar has more downside to go, which means that Bitcoin and cryptos should actually catch a little bit more of a bid here, probably to, Bitcoin 25.5, maybe 28, 29, 30,000 over the next few weeks. So I think that's important, is that, so basically if you look at this chart, right? So we slammed into this level here, which was the 2017 high, and we got below it. We saw the Voyager collapse, the Celsius collapse, Three Arrows Capital. I mean, all of that was bearish signaling, but the daily never had more than one close below the 2017 highs. It never had a secondary one below the lowest point here or anywhere. And that to me was telling me that smart money was buying in. And again, when you take that signal that you're still able to kind of, even though you get below the 2017 highs, but you fight back very quickly, that's number one, that's a bullish sign. But then if you look at the dollar and you say, okay, well, dollar's ridiculously extended. If the dollar starts coming in, that's good for commodities, which Bitcoin, you could arguably consider it a commodity now. That's good for crypto as a whole. It's good for gold. So to me, that was a good signal. And usually when the dollar pulls back, it's a risk on indicator. So when there's panic and there's fear, everyone still runs for the dollar. As much as you and I know that the government will continue to run up debt over the next 10, 20, 50 years, we're still kind of the strongest house on the street. And so when fear comes out, everyone wants to go into the dollar. So when the dollar falls, what it tells you is that people aren't as fearful, and by default, they're willing to take on more risk, thus buy cryptocurrencies. The move on the dollar, and again, if I just zoom out here and let's just go from the beginning of 2022 right here, right? I mean, that is in currency markets. Now, if you're in crypto markets, this is like run-of-your-mill type move up, right?
Right.
But in currency markets, this is ridiculous. This is like ground-shaking, massive earthquake type stuff. And so it does have an impact on foreign, allies. In fact, interestingly enough, I think today the ECB raised interest rates by 50 basis points in a surprise move. And what they're doing is they're trying to counteract the strength of the dollar. They're saying, okay, well, if we raise our rates because the US is raising theirs, our currency will kind of start to match theirs. And that's exactly what we saw today. So you're right. It does have an impact. There's no doubt that it coincides, I'm sure, with the midterm elections. I mean, one of the big calls, I think last time I was on, I said oil was going to trade sharply lower, probably getting to 85 to 75 going into the midterms. And I think oil was probably around 120 or 115 at the time. And we've seen oil collapse back below $100 a barrel now. So, it's kind of case in point doing exactly what makes sense when you know about midterm and just regular elections in general, as well as the worries about the recession and slowing down Europe and global demand. I mean, all these things coming to fruition, which, by the way, was counter to almost all the analysts out there that were predicting $150 to $200 in oil. It did at one point, right? So if we look at the EUR US dollar, it briefly got below 1, and then you saw the bounce right here. So here's your parity where the dollar was exactly equal to the euro. It got just below there. And one of the things I teach in my services is that these even numbers have a psychological impact. So trading is technicals, which are charts, which really are a representation of human emotion and how the masses feel. So when the masses are bullish on something, you see it go up, buyers come in, and when they're bearish, it comes down. So it's all about how emotion is playing in. And so there's something about an even number where when you touch it, that's where the buyers will come in on the euro, and they did just that. Now, in a month, we may be much, much lower, but at least in the near term, that was a good opportunity to see that bounce in the euro. Yeah, so I'm in agreement. So I think that you're seeing the dollar pulling back, which is kind of a rising tide lifts all boats mentality. So you're seeing money flow back into crypto. And what that's going to do is it's going to basically bring a lot of the bulls back out of kind of the forests, if you will, or the closets. And they're going to get real bullish again, saying, okay, the bottom is in. I had that short-term pivot right here at 25.5, but I think maybe we could even get up here. But ultimately, this would be kind of my max level, this 28, 29, 30,000 level. And then I still think we have that one more flush, like you're thinking, is where, you had with the 3 hours capital and Celsius and all these Voyager type scenarios, and even Terra Luna, you had a lot of kind of fear and panic. And that's usually the note of a short-term bottom. But I don't think it even reached close to the level of capitulation where you have people that are really like, just, oh my goodness, this is the end of the world. Now, again, a lot of people feel like it is because they bought in at 60 or 65,000. But in reality, if you look back at 2017, that peak, when you bottomed out, like no one even spoke about Bitcoin. I mean, or I shouldn't say no one, but I mean, it was almost like that the crypto wasn't even in the vocabulary anymore. This is the first bear market in crypto where the Fed hasn't been printing money, has been tightening, and inflation is high, which means it's hard for them to print more money again. And keep in mind, past corrective moves on Bitcoin, 80 to 85%. We haven't even done that. And according to the metrics, it could be worse than that because of the fact that, again, you have inflation and you have a Fed that's tightening. So again, there's lots of false bottoms in bear markets where it kind of lures people in. My guess is this scenario. Now, for swing traders like myself, it's awesome. We get long, we make money, we exit, we look for the next flush. But again, I think it will, once you get up to these upper ranges, these two lines, you'll see lots of bulls coming out. And I think that is the signal that you're going to have that next move to the downside. One other thing I'll show you guys is if you take the top from 2021 from November and you stretch it to this top, look at this trend line as well. It's almost coming right down to this area, right? So that 28 to 30,000 level. And that, again, that's why if we get up there, I think that's my max upside level on Bitcoin. I would guess 2 to 4 weeks kind of would be in that range where we could chop sideways for 2 to 4 weeks and then kind of grind up. I think we probably hit 25.5 or 25,000 within the next week. And then you'll see some resistance there and some chop, and then one more leg up going into that. And then after, probably outside of a month, we start our next leg to the downside. And again, really, if you look at the chart, I mean, what type of pattern is this? Well, it's a bearish pattern, right? Just like right here, right? Down move, sideways consolidation, down move, sideways consolidation. So it's just replicating what has happened in the past. Even over here, I mean, big down move, sideways consolidation led to further downside. Now, there is something that I'm watching, right? So this downsloping trend line, if price were to establish itself above that for, let's say, a week or two and really hold above it, then I would start to say, okay, maybe the low is in. But until that happens, the trend, I mean, it's called a trend line for a reason, right? You're connecting the high pivots. As long as that's in place and it hasn't really been held above by price, you have to think there's more downside. And I mean, just to be clear, swing traders thrive on volatility, right? So if you're a long-term hodler, you're just loving that market slowly going up day after day. For me, which is a much shorter time frame, I love the big ups, the big downs, the big ups, the big downs. And as long as I can read the pivot points, the levels, the supports, the resistance, it's amazing for swing trading. So yeah, it's been quite the year, both in stocks as well as in cryptocurrency. Ethereum, to be honest, is more like a stock in that it has a use case, right? It makes something, or at least it helps people do something, versus Bitcoin is just basically a commodity. In fact, Gary Gensler, I think this morning on CNBC, was basically saying that. He said, most coins out there are more like stocks versus Bitcoin more like a commodity. So I think the Ethereum is leading it like a stock bounce, while Bitcoin is kind of languishing because the dollar has been so strong. You've had these pause days here. Even today, Ethereum's starting to creep up. The first big challenge for Ethereum's at 1700, this pivot low, this area right here, and all this sideways chop. And then if it gets through 1700, I think you make a run at 19 to 2000. So again, I would say if Bitcoin's going to go to 28 to 30, I think you probably get to 2000 on Ethereum. And then again, if you only get to 25.5, then maybe Ethereum stops around 1700. But in either case, I still have more upside here to go, as you'll see again, kind of almost like a nice little cup pattern here.
Yeah.
You know, it's not quite a handle yet, but for the most part, it's a nice little cup potentially. And yeah, technically it continues to look strong until it gets into some of these resistance levels. Yeah, so I've been, the strength in the dollar surprised me a little bit. Now, granted, gold is still surpassing gold is only down slightly for the year versus Bitcoin as well as the stock market. But the one thing on gold is overnight it hit this major support line. Look at that support line here, and look at the bounce that you're getting in gold. It's really a tremendous bounce, basically $40 from the overnight low, which is a big move for gold. And so short term, that's a support level that I think you look for a further move up on. Minimally, I think you go back to about 1785 to 1800 on the gold chart. And then basically what I'm going to start watching is I'm going to start watching this trend line here, right? So this is probably, if you look at this pivot low here, and we draw a trend line, notice how that's right almost at the same spot. So if gold rallies, that's going to be your resistance line right around, 1785 or so. If by chance it can get through, that's where you start to have that bigger move up on gold. But right now, at least gold hit this major support line, and it held, and it got an amazing reversal. I mean, just tremendous kind of short squeeze almost off of those lows. Now, if we look at silver, so I'm actually bullish on gold and silver right down here. Both are into major support. I mean, look at this chop going back to 2019. All this sideways, this was your COVID drop. But if you took that out and you just assumed sideways, then it was just before the big breakout. And now you've done a full retrace to the pre-COVID highs. And I think that's, again, a major opportunity for silver as well as gold.